All right, good morning, good afternoon, and good evening. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Senior Analyst. It's my pleasure to welcome you to the GBBC Virtual Members Forum. This is a bi-weekly webinar we host showcasing the innovative work of our members around the world. And today we have the pleasure to be joined by Raymond Zenkic, President and CEO and COO of Evertas, which is a leading crypto asset insurance company. He will be presenting on the crypto asset insurance space and the path to growth, adoption, and wider acceptance of crypto assets. Just briefly before we begin, I would like to introduce Raymond. He specializes in distributed future and the intersection of crypto assets, blockchain, financial services, and insurance. And he is an experienced technology executive with a 25-plus-year career spanning database design at Indy car racing team to inventing a patented video compression technique to a leading management consulting firm. Raymond also serves as an adjunct professor at Northwestern University's School of Law, where he contributed to the creation of a unique technology-oriented Master's of Studies in Law program. And he has also been recognized by both the US and Canadian federal courts as a qualified technical expert witness. We are so pleased to have Raymond here with us today to give us some background on Evertas. He will also be answering questions. So please put your questions in the Q&A box at the bottom of your Zoom screen, and we will take them at the end of Raymond's presentation. Without further ado, I will hand things over to Raymond to kick us off. Thank you.
Thank you, Sophia. Good morning, everyone. Really appreciate the opportunity from the GBBC to be here this morning and speak with all of you. The main issue we're trying to address, as Sophia mentioned, is really talking about crypto asset insurance. It's a topic that is certainly of increasing interest to a lot of people and institutions and also regulatory bodies worldwide. And we're going to talk about the keys to growth, adoption, and acceptance. So Evertas, who are we and what do we focus on? We're solving the very real problem of insuring crypto assets. If you, for example, own crypto assets today, you may have them being held at a custodian or an exchange or both, excuse me. The question you may want to ask is what happens if something were to happen to those private keys and your assets, you were to log into your account one day and see that they're not there anymore. And if you think about the regular banking world, if you have your money, for example, at a checking account or a savings account, you know that your bank has an FDIC type of insurance product, which will protect your accounts in the event of an insolvency. There's nothing like that in the crypto world today. And a lot of basic insurance type concepts or products are being developed right now. And we're helping to solve, again, this very real problem. So as of today, so October, I think it's 29th, 2020, the crypto asset market, and more specifically the cryptocurrency market, is at roughly $390 billion. That's the market cap of all cryptocurrencies today. If you notice, I've added a really small bubble next to it to give you some sense for how much actual insurance is available in the market today. It's roughly $2 to $3 billion. And that is a small fraction of what you would expect to see in a market of this size. So that's the real area we're focusing on, is how to get more insurance available to the market. We believe that financial systems for institutional crypto assets are going to evolve over time, and they're going to evolve in a way to mirror traditional financial markets. So what does that mean? If you look at traditional markets today, you have primary, secondary markets, so where to actually move assets back and forth, or mechanisms to move assets between investors. You have the investors themselves, that can be funds, institutional or retail investors. You have infrastructure like exchanges, custodians, regulatory organizations. You have regulation. You have insurance. If we think about the institutional or crypto market today, these light shaded areas are ones that are, we would argue, well underway. The primary and secondary markets, investors, and infrastructure. Regulation, it could sort of go underdeveloped or well underway. It's certainly, there are regulations in place, they are evolving. Insurance is really quite early. And again, the area we're focusing on. we commissioned research to understand this dynamic of the lack of insurance capacity and the demand of insurance. And so we commissioned research to talk to insurance executives and understand the state of the industry. And the sentiment we found was quite interesting. We asked a series of questions and the responses highlight quite a bit. So for example, over the last 3 years, how do you see demand for insurance to crypto assets changing? Obviously, the majority, 70%, saw either a slight or increase in that demand. How prepared do you think the insurance industry is for providing insurance against risk related to blockchain and crypto assets? Here you can see that the market, the insurance executive think the market is actually poorly or very poorly prepared. How difficult do you think it is for brokers, that's insurance brokers, to place insurance around crypto assets and blockchain at the moment? Again, difficult to very difficult. To what extent do you agree that directors and senior executives are exposed to being sued if they suffer losses or theft to their blockchain or crypto asset activity because they do not have adequate insurance in place? Here, most strongly agree or somewhat agree. And what do you think the chances are of blockchain and crypto asset related insurance claims being rejected because the risks involved were not properly assessed or recorded when the cover was taken out? Again, most agree very much. So this highlights, again, this notion that the market has not fully evolved to cover these risks, and there are a lot of concerns out there. And we would argue, as the market becomes more mature and more professional, the topic of insurance will increasingly come up and need to be addressed. So why does insurance matter? And for many people, attending today, it's probably just worth taking a step back and asking this question. So at the most basic level, insurance is the transfer of risk. You pay a premium, for example, for car or home insurance. You pay a premium in exchange for if there is, say, a fire to your home or you're in a car accident, that the repairs will be made. Insurance often drives standards for new products and markets. This is a really important point. If you look over time, it's really insurance that will drive improvement to safety, improvement to product safety as well. And you can think about the National Highway Safety Institute, where they actually do a lot of testing of cars to see how safe they are. Those standards are very much in their infancy today in the crypto asset space, and we are focusing our energy on creating a very thorough underwriting framework to assess the risks associated with the custody of crypto assets. And we'll go into that in a little more detail in a few minutes. But that's where we see the role of insurance being incredibly helpful, is to provide standards for custody. So institutions and retail customers will feel more comfortable or confident that their assets are being held correctly. And they won't wake up one day and see that they're gone from their account. And an example of the risks I'm talking about today is that of private keys being stolen or lost. And so, for example, if you have your assets at an exchange and maybe you're buying and/or selling crypto assets, that exchange is likely a custodian, or you may have them held at some place that just custodies assets for you. And those keys are at risk. Excuse me. So institutional holders of crypto assets, they are seeking insurance today. It's a very clear demand and actually extremely high demand that we see every day. So what does that mean? The types of people who are seeking insurance, institutional holders seeking insurance, are custodians or exchanges. So again, places where you would place your assets. It's quite common for people to think about crypto currencies, for example. They're very decentralized nature. It's why do you need a custodian? Why do you need an exchange? And for a lot of people, you don't, right? You can keep them on a USB type key, and you can self-custody, or you can have things on paper, for example. The key's on paper, and you can self-custody, put it in a safe deposit box. That often doesn't work for an institution. And there are custodians who are professional custodians who hold obviously large amounts of assets for institutions. Those could be investment funds. It could also be corporations. And what they do is essentially provide a mechanism for these places to outsource to a third party the custody. So in that situation, what happens, and we've seen this, is institutions will ask that counterparty, that custodian, if they have insurance. And oftentimes the answer might be yes. It might be yes with a bit of an asterisk. And we know of situations where people looking to place hundreds of millions of dollars worth of cryptocurrencies at a custodian, they were not able to do that because their risk committees were not comfortable with the level of insurance being provided. That to us is a major obstacle to broader adoption of crypto assets. And until there is enough insurance that allows large institutions to easily and without thought, really, place assets at custodians or exchanges, it's a hindrance. As I mentioned, traditional financial institutions, we see press releases every week about new institutions looking to enter the market or deploy larger portions of their portfolio into cryptocurrencies. Crypto funds, traditional funds, and family offices. All of these are people who increasingly want and require insurance for their custodian partners. And we're going to talk a little bit about regulatory issues later on, but in certain jurisdictions, I think it's Hong Kong, there are requirements for custodians to have insurance. That is changing, and in our discussions with regulators, that is clearly going to be happening across more and more jurisdictions over time. We also commissioned research very recently into the sentiment of institutional investors, and it does highlight a clear and increasing interest in crypto asset investments. So what we learned was between now and 2025, so the next 5 years, 90% of institutional investors surveyed expected institutional investors to invest more in crypto assets like Bitcoin, and 80% expect retail investors to do the same. So while I think a lot of people, especially people attending this event, would say, what's the big deal? We're going out and trying to get independent confirmation to make sure that we really understand the broader market and what the sentiment is. And so this was, for us, very encouraging to see that this trend is real and in fact is growing. And importantly, what I'd like to add is that it's this insurance infrastructure that will need to keep pace. If you think back to the one of the first slides I showed, a market cap of 390 billion with only 2 to 3 billion of insurance available. That will need to increase, and that's the challenge going forward that we're helping to address. So why is there so little insurance capacity available today? The first is that it is very difficult to underwrite. And what do we mean by that? Much like cryptocurrencies are opaque, very new to people, hard to understand, people increasingly understand that it's like an asset they can buy, they can sell. The moment you go into how the asset itself is being held, custody is essentially, how the keys are managed, how assets are being moved by a custodian, it becomes very difficult to underwrite. And underwrite in a way that is scalable, to its consistency, and it's efficient. And that's where we focused our time over the last 3 years, is develop an extensive underwriting framework across 16 different categories, hundreds of questions, and a framework that has to scale with different types of organizations. So if you think back to the earlier slide where we described the different type of institutional investors, on one end of the spectrum, you had custodians and exchanges. These are typically, they're holding large amounts of assets. tens of millions, in some cases, hundreds of millions of fiat equivalent. They typically have large staff, different sort of security and sort of threat vectors that they're exposed to. Compare that to a family office who may have, let's say less than $10 million of assets, and they may not use a custodian or exchange. They may self-custody. So another really important distinction is that custodian or exchange, they manage, or they're managing assets for third parties. They have customers. That introduces a whole set of additional risks that have to be looked at and assessed versus, say, the family office. So our underwriting framework has to be able to be applied to the small family office, no third-party risk, to the large, multinational custodians or exchanges that have third-party risk, have much larger assets under management. And there's also, I think, with GBBC and other institutions, there is a lack of knowledge around crypto assets and technical implementation. So the amount of people who can truly navigate crypto assets at a technical level, also have an understanding for risk and underwriting and insurance, it's very, very, very small. That world is very small. And so it is difficult to fundamentally have the in-house expertise to underwrite. So why else is it difficult? Or why else is there so little insurance? I think most people listening right now would agree that there's this view that crypto assets are somehow risky to insure. And we would think that view is incorrect. And again, it comes back to our underwriting. They're not. You can in fact understand and measure that risk. Insurance companies, they sort of have a general direction or strategy, increasingly over the last 6 to 8 months with the pandemic, to focus on new risks. To focus on known risks rather than new ones. And this is just by nature, insurance companies are conservative, and they will, they're choosing to focus their assets on risks that they know rather than new ones. That's obviously, we think, the opportunity in this space, but you can certainly understand through that approach of not taking on new risks at this time. The other issue, which is really more structural to insurance, is that while almost 400 billion of assets of global market size is large, the reality is it's quite small from the insurance company perspective. And if you think about the premiums that would have to be tied to that market size, it's really quite small. And so, for these reasons, that's why you're only seeing $2 to $3 billion of available insurance, right? So it's difficult to underwrite. There's an incorrect view of crypto assets being too risky to insure. A direction by insurance companies to focus on known risks rather than new ones. And then the current market is just too small, and the premiums tied to it are just too small to be of interest to large insurers. To give some perspective on how large it would need to be, it would probably need to be in the multiple trillions, probably 10 trillion in size, for it to be of interest for larger insurers. So how are we helping to solve the problem? So Evertas, we have developed a code product. Code stands for coverage of digital exposures. And we're really solving this problem of supply and demand. So demand. Demand is represented by the end insured, so the person or the company seeking the insurance. There's a retail broker who works with them to try and find insurance. It's the retail broker who realizes that there really is not enough insurance capacity or supply in the market. On the supply, we have insurance companies. And what we are doing to unlock supply is create an insurance product that is a full life cycle product that insurance companies and the insureds and retail brokers understand it's addressing this very specific problem for crypto assets. So over the last 3 years, we developed all the components for this full life cycle insurance product. So what are they? It's a policy form, and believe it or not, the insurance policy form that I'm sure many of you get with your auto policy and your home policy that I'm going to guess many of you don't read. It's not light reading, but actually that policy form is quite important for all insurance products, and it's really important for crypto assets and cryptocurrency coverage, custody coverage. If you think back to my comment around people who are familiar with cryptocurrencies, how they're custodied, and insurance, there is yet another dimension of insurance expertise around policy form, policy language. That's we're really fortunate to have the great in-house team to be able to develop that language and make it very specific to crypto assets, and make it be a policy that really gives the insured clear knowledge of what protections they're getting, and if there may be certain exclusions. An example of an exclusion is, for example, if there is a protocol failure. So the insurance policy not covering cases where there is a protocol failure of the specific blockchain. The rating plan. So this is where the rubber hits the road. So after we do our underwriting, we have to rate. We have to help determine how to price the insurance. Much like based on your driving history, you've had to get an auto insurance policy. There is a lot of data around things like auto and home policies. There's very little when it comes to crypto assets or cryptocurrencies. So that's where, again, our expertise is being able to develop a rating plan that's actuarially sound. Risk mitigation. This is what we bring to the table that helps custodians or exchanges, people who are seeking insurance, to actually do a better job. And it comes back to the standards that I mentioned earlier as well. And we're also unique in that we do ongoing monitoring of certain aspects around the risk to be able to keep informed and abreast of the risk profile of any insured. Distribution. So we need to be able to go to market and as efficiently, as effectively as possible. Claims forensics. This is something that is maybe a surprise to many people, but much like the amount of insurance capacity available in the space today is quite low, given the overall market size. There's very little capability in the market today to actually know what to do if there is a claim. So what I mean by that is you can think about all of the accounting forensics and overall forensics that need to occur in the event of a loss, like for example, needing to trace addresses, and requires a lot of tools and requires the right expertise. And again, we're fortunate to have an in-house team who actually has decades of experience in doing investigation work. So claims forensics is incredibly important. And we're one of the few companies that actually has the ability to actually understand what to do when there is a claim. And then lastly, underwriting. Underwriting really underpins as the foundation for a lot of what I just talked about. And it's really what drives our ability to assess the risk. So we view our underwriting methodology as being market leading. And we've gotten confirmation from a lot of participants in the market that we're doing a lot that is not being done today, and in an exhaustive manner, which has been really encouraging for us. The risk that we look at from an underwriting perspective is broken down into 3 areas: technology risk, business risk, and operations risk. And those are then further broken down into 16 categories. What we do is look across those categories, and as I mentioned earlier, the questions in each category change based on the type of entity you are, a family office versus an exchange, for example. So that's an element of our underwriting being dynamic, which allows us to efficiently and in a scalable manner help assess this risk. One more thing. There is this broader digital asset market. We've focused this discussion around crypto assets, cryptocurrencies. And what's really exciting for us is that there is this broader digital asset market that's evolving, and GBBC is clearly, at the forefront of a lot of these discussions. And there's a quote from Jay Clayton very recently, the SEC chairman, that said, "It may very well be the case that stocks all become tokenized." And that's very, very, very important to mention, because if you think about DeFi and tokenized assets, all of which will have some element of a private key or aspects that need to be custodied, the same insurance issues exist. And so, we view the broader tokenized asset market as requiring further innovation and development of the insurance infrastructure. And there was an interesting research piece done by the World Economic Forum and others that projected up to 10% of the global gross domestic product, GDP, will be stored and transacted with the help of blockchain technology by 2025 to 2027, representing 24 trillion of financial assets by then. Now, I think we could argue that it's very hard to predict exactly where and how large the market will be at that time. But there certainly is a notion that many assets that we see today, stocks, bonds, real estate, there's a lot of activity to tokenize them. And as those digital assets are stored, that is when this issue of custody comes up, and the issue of insurance and protection of all of the parties around that storage being incredibly important. I reached the end of my sort of prepared presentation. What I will do, and feel free, as I can show you on screen here, to reach out to me if you'd like to talk about any of these issues in more detail. I will stop sharing now and perhaps address any questions you might have.
Excellent. Thank you, Raymond. Yes, we've had quite a few questions come in, so I'll just start rolling through these. The first one is, at what scale can Evertas's solutions be deployed?
Great question. So it may help to get a little more clarity on the question, but what I will do in terms of the scale is think about it in perhaps two ways. So for us, scale first and foremost is how can we efficiently underwrite? So can we underwrite today, let's say, thousands of potential insureds? The answer is no. We have an automated platform. We have a very sort of robust system for looking at underwriting. However, it's not at the same rate that you would say auto insurance is today. So for us for scaling, we can certainly handle the current demand, but ultimately our goal is to continue to evolve and create automation that will allow us to underwrite not only more insureds, but also the second aspect being the amount of insurance. So the second issue around scale is how much capacity, insurance capacity, is there in the market, and that's where we have discussions every day with insurance companies, trying to make them or how to be more comfortable with this risk. And if I haven't answered your question, and I may just look here in parallel, just let me know again if I can clarify any aspect of that.
Absolutely. Please, anyone feel free to submit a follow-up to your question if you have further questions. Moving down, so somebody's asked if you could speak just more broadly to where are the crypto asset insurance hubs globally, and we had a second question that asked, where does Evertas currently operate, or where are you looking to operate, maybe?
So I think the first question, Sophia, was where are the global insurance hubs? Is that correct?
Yes, correct.
Yeah. So today, it's really dominated by the London market, so the Lloyd's market. And that makes sense because it's a unique risk. And, Lloyd's tends to really be one of the first places that innovation around insurance occurs. So they're really at the coal face, I would argue, of understanding this risk and providing insurance capacity for the market. I don't have the exact numbers, but I would say it's the far majority. I'm not going to say it's all, but it's certainly the far majority of coverage or capacity that we see in the market today. And then could you repeat the second question?
Absolutely. Somebody else asked, where does Evertas currently operate?
Oh, great question. So we're located in the US. We can certainly help with companies worldwide. Insurance, as you know, is highly regulated. So we will in fact work with broker partners around the world where we need to. But it really, I mean, I'll kind of take that question to kind of lead into where we see demand. So demand right now is probably roughly 50-50 between the US and sort of non-US in terms of where people are seeing or seeking insurance, and the non-US portion of the market is growing very aggressive, very, very rapidly. So it truly is a global phenomenon, and people worldwide are seeing the need for insurance.
Thank you. I guess building off of this question of demand, somebody asked, are people ignoring insurance until we have another episode like what happened with Mt. Gox? And do you think there's actually enough demand to match the risk in markets?
No, great question. I sure hope not. You never want to think about insurance after the event. No, what I should, as I allude to my earlier comment, I think this market in general is becoming more professional. So it is a question being asked upfront and earlier. People are aware of Mt. Gox, and it's we get that question quite often. So no, I would say this market is becoming more professional. I think people are not waiting. They don't want to be at another Mt. Gox. And so again, coming back to standards and insurance, asking if you have insurance is a very easy way to understand, has there been any level of scrutiny or any level of risk assessment on an organization? And that's why it's being asked more often, because it's a very easy way to understand, okay, are you, how sophisticated are you in thinking about risks in the space and threat vectors coming at your organization?
Absolutely. So you've spoken about the underwriting process. Somebody asked if you could walk us through the claims process for Evertas. They provided the example of, say, for example, if someone is SIM swapped or were hacked.
Yeah. So I won't go into specific details, but what I can say is the very early steps are to understand what actually happened. And that in and of itself requires a lot of expertise. So for example, I'll give some example of things, like what addresses were involved, which cryptocurrencies were involved, are the endpoints in jurisdictions that have a robust sort of legal system. I really don't want to go into more detail than that because clearly, yeah, it's an area that we kind of want to keep somewhat guarded.
Absolutely, no, that's helpful. I think just underlying the level of expertise required to even kind of carry out the claims process or underwriting.
Yeah, it's people and tools. I mean, we have to have the right people, the right training, and the right tools.
Mm-hmm. Somebody said, Raymond, so right, digital assets are a huge market. Do old insurance companies get that, or will new ones come in and become, say, the next Lloyds of the digital asset space?
Oh, great question. We appreciate that. Look, I'm not going out on a limb here and saying that insurance companies tend to be conservative. That being the case, they all recognize the need to innovate, to stay relevant. And Lloyd's understands that as well. And most insurance companies understand that as well. So they do have teams looking at cryptocurrencies, trying to understand the market, monitoring it very closely. And many insurance companies, I would say, will be involved in placing policies on an off and on basis just to keep abreast and monitoring. But I think in particular, I think Lloyd's is doing a good job of staying out in front of the market, trying to drive innovation. Yeah, that's kind of my answer.
Absolutely. Somebody else asked, what do you think about an SRO, or a self-regulated organization for insurance on crypto assets in the US?
Great. In the US or? In
the US.
Yeah.
You could speak globally too.
Yeah, sure. Great question. I could probably spend hours on that. I think that at an industry level, it can be difficult for insurance companies to work together. So that's sort of one obstacle, I guess you could say. I think the way SROs could develop here is where there's a clear need for some level of self-governance, where it's really the end users expecting an institution to sort of embody all the regulatory and governance oversights, and not just around insurance, but sort of all aspects of cryptocurrency. So if you think about, how the NASD, the role that it performs, it's really wearing a lot of hats. And so it's something we've thought a lot about. And I would say the one common theme that we focus on is the needs for at least standards. So having a way to at least have a common language to discuss, in our case, the risks and to discuss the assets themselves, that's where I see a clear need. And I know that GBBC is doing some work in that area as well. So that's how I think it's going to evolve, but it's a great question.
Raymond, that actually led directly into the next question. Somebody asked about standards specifically and how they would help drive adoption.
Yeah. Again, could I spend a lot of time on that? What I will say is, I think the market really is sort of craving standards, but I do think it's going to be driven by end users. So it's going to be the retail customers, the institutional customers, really forcing people to think about standards. And there needs to be some kind of an objective party to sort of help drive this discussion. Clearly, the custodians and exchanges will see their technology or technical approach being unique and proprietary, their secret sauce. But look, other industries, just look at the internet and how it developed. There clearly were areas where companies could in fact get their head around certain areas of standardization that help everyone and help grow the market. So if you think about like IEEE, the benefit that IEEE brings to standards discussions is that it gets a lot of industry players together to focus on creating and agreeing on technology standards and roadmaps that help grow a market. So that's where I think the common interest lies, is in where the standards can be developed to help grow the market and make it bigger and increase adoption.
Absolutely. Just before we end, I guess 2 questions that are a little bit more about the state of current affairs. Somebody asked, what are your thoughts on PayPal allowing cryptocurrencies, and is this a major advancement for the industry?
We see it as being a major step forward. At the most basic level, it's further recognition and acknowledgement that cryptocurrencies are not a fad. That these clearly are going to be payment mechanisms and methods of payment worldwide. And so that to us is a significant sort of milestone for the industry.
Yes, absolutely. Just to ask you, so based on what you're seeing in the markets today, has the pandemic accelerated, slowed, or changed insurance in the digital asset sector?
No, wow, another good question. I'll sort of answer 2 different pieces of that question. I think the first piece is it affected the industry overall. Clearly, a lot of concern that insurance companies had around are they going to see an increasing number of claims related to COVID cases, health-related claims. There have been a lot of sort of downstream effects of the changes to the work environment. Fewer people in offices, less need for example, office space. All those have big implications for insurance needs. What's interesting is that an indirect impact that the coronavirus has had on I would argue, cryptocurrencies in particular, is that a lot of the monetary policies that were put in place, like stimulus-oriented policies, PPP here in the States, the Payment Protection Program, have really increased discussions or thoughts around rising inflation. And so indirectly, the thinking that there's going to be more inflation has led to more interest in cryptocurrencies. And in particular, I'm thinking about the larger ones like Bitcoin, Ethereum, et cetera, as a hedge against inflation. So that to me are kind of the interesting ways that the pandemic has affected sort of not only outside cryptocurrencies, but also the insurance world.
Thank you. Before we end, a question we'd like to ask is, Evertas has been working hard. You've had plenty of announcements recently. Looking forward, what's next on the horizon for Evertas, or what is the latest milestone that you maybe like to highlight?
Yeah, the biggest the milestone we see over the next coming months is having insurance capacity. So being able to fill that supply portion that we talked about. So, for us, it's, having more sort of more underwriting. So more insurance policies. That to us is important because it shows that the market is also growing. We continue to update our underwriting framework almost monthly now. And I would say, our goal is to have that be fully automated, I would say within the next 6 months, and that's exciting for us. And then as I mentioned before, the ability to have capacities, go to market and have capacity so we can help the insureds and the insurance brokers and the broader cryptocurrency community, crypto asset community, have the insurance infrastructure that it needs.
Excellent. I can say for myself and for GBBC and probably for the folks listening that we look forward to reading up on the news and advancements that Evertas makes. In addition, I'll just say that a recording of this webinar will be shared with everyone who registered today, both those who were able to attend and those who might watch it afterwards. And also, Raymond, we'll share your contact information if you'd like, and links to learn more about Evertas. Just before we sign off, I'd like to thank you so much and let you say any final words if you'd like.
No, thank you. We really appreciate the opportunity. GBBC has really led a lot of very, very important discussions, including the insurance discussion. So thank you for the opportunity.
Absolutely. Thank you so much, Raymond, for speaking to us about a very timely and important topic and a growing space that we should all be watching and be mindful of.
Great.
Thank you.
Thank you.